This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Wednesday, October 1st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, December corn down 2 3/4 at 412 3/4. November soybeans are down 5.5 at 996 1/4. And December Chicago wheat was down 5 at 503. No export sales announcements here this morning, so we'll jump right in. I guess what we know as we start the morning, we got the report behind us yesterday. Now our thoughts move to will we get the next one? Government shut down at midnight last night. Partial shutdown, obviously, essential personnel still reporting this morning. But as far as reports, we can't say with certainty what reports we will get and what we won't get. So it's very, very vague from the USDA and the other agencies here this morning. So I guess with that, guys, good morning. Dustin, maybe a few thoughts now that you've had time to certainly digest the report. I know weaker markets overnight, but maybe share a few thoughts and then we'll kick it around the room.
Yeah, we were just talking about it here yesterday and this morning still, pretty big revision from expectations, an extra 200 million bushels. It's not that surprising. The market was trying to tell us something through both basis and spreads for the last couple of months that there may have been more grain around than we were expecting. The implied demand usage is down because they didn't change the June stocks number. They just lowered the September number from expectations. We know that, exports were much stronger than last year, over 100 million bushels, 170, I believe. Ethanol production was up almost 1%. So, the implied feed demand is down, which would be probably more bearish if we just took those verbatim, if it's a demand problem. No one really knows. It could be it was counted wrong in June. They just didn't change it. But either way, I think it's just, that adds to the carryout, and that's what's pushed us lower the last 2 days. But I think more rather than trying to guess what's happening there, like just thinking about the net outcome. Right now, we've got the first day of October settlement for harvest price discovery is today. So just even from yesterday until today, being down 2 3/4, if you're in a county that is in the money on an ECO payment, for example, that's another $6 an acre payment, right? Just from the overnight move projected. So that's gonna impact our decision making over the next month. I think if we had a choice, we'd want to probably see the price as low as possible if we're in active insurance payments, because if you think about it this way, if you have a clear payment all the way down from ECO, SCO, and RP, and you're getting paid all the way down to 350 corn, would you rather own 350 corn in the bin with a 60-cent payment, or would you rather own 410 corn in the bin with zero payment? Right? It's probably cheaper to own it from a lower level. So in effect, at least in the short run, a lower market while the insurance payments are active may actually end up being a silver lining.
Very good. Justin, what's on your mind here this morning?
Yeah, I mean, I think we've, talked about this a lot, but it's just, we had a 40-cent rally going right into harvest. I think you look at, March corn got up to 450. I think with the acres, that we have now, I mean, that we're called reconciled, but, August, September, we're sitting at record acres, and I think a yield that's going to be hard to get 180 or below. I think it's going to be tough just mathematically. It could certainly happen. I mean, we are starting from a high level, so I think we've got really excited about coming down from 189, which I think we all, when it came out, was kind of laughed a little bit, like that's pretty crazy. And then we had a kind of a poor finish. So I think a lot of people are just trading yield, and that's why we rallied 40 cents, which is fine. But if you just take the acres at face value, which we've talked about a lot on the show, and even a 180 yield, it's just too much supply. And I think the demand numbers, you look at the animal numbers that we have in this country, I just think those are super hard numbers to achieve. And, I keep trying to replay it in my head, but, doing the math of the Western belt, which, we have heard obviously tough stories in Illinois, Indiana, Iowa for sure. But we've heard fantastic stories out of, areas that don't typically get great yields, but have a lot of acres: Kansas, Nebraska, Dakotas, Minnesota, etc. So, I just think we had a nice short cover rally, and now we're going into harvest, and it's just going to be a headwind. We just have too much supply, whatever you think the yield is, with this many acres, too much supply. And, like Dustin said, I'm kind of cheering for a lower market while crop insurance is active, because I think it gives more optionality to our customers. So selfishly, I'm kind of hoping it goes down.
Sure. And Dustin, you bring up a great point. I think there, throughout the month of October, we were talking about this yesterday, just understanding the dynamics of how that's, peeling off every day. And, as you go through the month, and just keeping, to Justin's point, your optionalities open, and understanding how all that comes to play is going to be huge. It's because you got less and less coverage as you go through the month, each day, as we're setting that price. And then obviously you get halfway through and you're home. So it's understanding, from unpriced bushels to the policies you've got, whether you're in or out of a payment, there's a lot of moving parts. So even as you guys are busy out there, lean on us, to go through and run these numbers so that you're understanding where you need to be positioned. Very important.
Yeah, I'll add to that real quick. It's a good point, Dan, because this is the time of year when these changes are being made on crop insurance, where you can't be lazy, because you could have, as this expires, you could have a lot of, I'll call it slippage from where, that policy expires to a market move, around or after that. And we saw this, God, what was it, Dustin, 2021, 2022, somewhere in there. And, kind of went sideways through crop insurance, and then had a, 40, 50 cent break. And so if you just let that expire, I mean, you can turn a decent year into a horrible year. Obviously, it can work out the other way and work. But you really have to, I think, be diligent during this time frame and figure out how you want to bridge that gap.
Yeah, especially 2023, because people had such high guarantees. Like we had huge guarantees from that high price coming off of 2022. And everyone's cash flow was good, right? You had 2020 going into 2021 rally. You had 2022 elevated because of the war. 2023 started out really good. It finished what people perceived to be a poor price, which was $4.50 DC 2023 corn at first notice day. But there were very little insurance payments if you didn't elect ECO that year. That was kind of the first big year that we were looking at it, 2023. And then thereafter, there was a, loss of carry. The very lowest price you could have received is carrying it all the way into August 2024, which there's a couple ways to carry it. There's one, you pay commercial storage to carry it, or you pay the basis roll to carry it, or you just put it in your bin. Either way, that was really, the longer you waited that year, the worse it got. And that was the last big corn acreage year. And that was also the last year that we had a record crop, total crop size. This year, we're talking about what the WASDE report has written down, 1.4 billion bushels more production than that year. So I know the concern is that the yield's just not out there, but we have pretty easily 400 or 500 million bushels of production swing, in my opinion, where we still are left with a sizable carryout.
And there's there's going to be a lot of rumblings and questions here today. Already got a number of text messages like, what's this shutdown going to mean? You know, how's this going to impact markets? What's it going to do for us?
Yeah, good question. I mean, last time I think it was 60 days roughly, which would take you out of the October and November reports.
That sucks.
Which stinks, right? So I mean, there's a chance that the stocks numbers, the last fundamental report that we get this year, which would be horrible in my opinion. But the market, you know, we got, you know, three bearish reports in a row now. The first two they shrugged off. The third, you know, might have been the straw that broke the camel's back going into harvest. You know, where you kind of shrug off like yields. I personally don't think yields are coming in bad enough to say that it's, you know, a crazy number lower, meaning like a 170 type yield or anything like that. So I think the amount of acres that we picked up, I think we're finally enough. And then you found 200 million bushels on the stocks report, at least for now, at least going through harvest and trying to digest this, which it's going to be a massive crop either way. We can argue what the number is on yield. So it can be a massive crop. I think that was just enough to roll the market over. So, I mean, corn really, and beans. I mean, you know, beans, if anything, it's, you know, it's got the demand problem. I mean, beans had the best chance for a story, I think. You know, we lost a ton of acres, had the driest August on finish. I think maybe bean yields are starting to come in worse as you get into later planted stuff. If it didn't have the China trade, you know, issue going on right now, I think beans would maybe be leading the market higher. But now we're getting ready to test kind of that low. We've been in that dollar chop, call it, for a year now, you know, call it 980 to 1080, you know, so I think we're, you know, market's trying to go maybe test the bottom end of that range too. So the markets are just turned over and there's just not a story to turn them back up right now that I can see, especially going into harvest. So I don't know if you guys disagree, but that's kind of my thought.
And so with that, Justin, I mean, is that the spreads continue to widen? I mean, you think we just kind of stay in this status quo? The front end of the market is just going to.
Yeah. I mean, look, I mean, you know, you know, I'll talk my book a little bit here, but you know, I think corn spreads look interesting because I'm kind of friendly new crop corn. I think there's going to be a natural rotation. It's going to be hard to keep this many acres. And, you know, we have river levels continue to plummet because we've been so dry in the East. Mm-hmm. I think safrinha crop is going to be sold, you know, so I think there's going to be pressure on, call it, between now and March corn. At the same time, I think these 26, I think should be supported. I think there's going to be a natural rotation away from corn into beans. I think, yeah, I do. I think spreads are going to be wide, and I think it's a different trade than just flat price, you know, trading flat price. I think you could see some crazy things happen in spreads personally. It might not happen, obviously. I mean, we could, you know, the question is how much can the farmer, you know, store or will store? You know, obviously that could happen, but I do think we're going to be dealing with a tremendous amount of bushels. And I do think too on this rally, not to get on a soapbox here, but I do think a lot of people are going to be sitting down with their banker in the not too distant future talking about, you know, hey, I'm just going to store this forever and not sell it. Like, screw them. Like, I don't know that that's going to be an option for a lot of growers, unfortunately, in this environment. Just from the calls that we've gotten from bankers worried about loans for next year and trying to pencil out, like, what are we dealing with? I do think there's going to be some cash flow needs that need to be met. Probably going to happen a lot with basis only contracts, just because you'll free up cash to do that. So I do think that'll be a popular thing. So that might make spreads okay, even in the December contract. And the last time we saw this on a massive level, it really affected March forward, right? Because everybody put basis contracts, you know, did all these things, and then it just was was kind of a cancer every single first notice day as you went through the year, because the flat price went rally, so the farmer had to roll to keep that call it that long going. So that, obviously I don't know what's going to happen, but I kind of think that's going to be a problem.
Very good. Ryland, real quick here, we'll move over to livestock. Pretty good volatility yesterday, especially in the feeders. Hogs, interestingly enough, are back right where we were prior to the report. So a lot of movement there as well. Maybe share a few thoughts here as we start the morning.
Yeah, no, it was a kind of an impressive finish. I mean, the feeders were really leading the charge kind of late yesterday. We snapped back, huge range. So, I mean, overall, just kind of felt like maybe end of the month, end of the quarter kind of repositioning with everybody just kind of waiting until late. Still haven't seen any cash trade on the live side of things, but there was a little bit of hopeful trade going on in the choice yesterday. We were up 35 at 371.03, and select was still lower, down 164, but a little bit more of an optimistic tone. Maybe things are starting to stabilize a little bit, but overall still have yet to see what cash is going to do. And I think just generally speaking, the sentiment is still pretty weak for this week. So we'll see how that goes. We got option expiration on Friday. Some of the bigger open interest strikes right now would be the 230 puts and the 232 calls. So it feels like we just fell right back into that range. So I imagine that there's going to be quite a bit of support down here just from that standpoint alone. So we'll see how that kind of shapes up. And then on the hog side of things, still kind of same thing, end of the month repositioning. It kind of felt like, and obviously this market has been unnaturally strong this time of year, and it does feel like you priced in quite a bit of what the report was going to say well before it came out. Just felt like we saw an extension of that. So we have taken most of that back, and we are starting to see continuation of the weaker cutout and weaker cash. I mean, it's that time of year. We seasonally trend lower. I mean, I think we baked a lot of kind of negative kind of sentiment in the market, but prices are still really elevated. So overall, just kind of feels like we're going to keep trading that kind of weaker seasonal in the cash and the carcass for right now.
Very good. Appreciate the update there, Rye. Just came into the open here. We'll get a quick readout. December corn down 3, 412.5 is the last. November soybeans are down 4.5 now, 997.25, and December Chicago wheat down 4.5 at 503.5. Normally we would be discussing weekly export sales tomorrow. I don't know if that report's going to be released. Kind of conflicting comments here this morning, so we'll have to see what happens. It should be out at 7:30 Central. If that is released, we'll talk about it there tomorrow. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.